Hello and welcome to CNBC TV18 Conversations. Our conversation today is with an iconic banker who is in the thick of the global economy and the financial markets, who will perhaps have all the answers that Indian financial investors are seeking. My guest is Vis Raghavan, the Executive Vice Chairman and Head of Banking at Citigroup. Mr. Raghavan, thank you very much indeed for joining us.
No, thanks for hosting me.
Well, I want to ask you about a lot of things about Matunga. You come from Matunga, where I come from, but we'll keep that conversation for later in in this chat. Let me start with what our viewers really want to know, the growth story. I mean, you must be talking to the largest number of bankers since you head banking at Citigroup. Are you getting a sense that the corporates are willing to invest? Is the growth story intact in the US and in, the global economy in general?
Absolutely. I think, you clearly, we will not go, there's a whole AI-fueled, AI-powered boom that is, absolutely omnipresent. You can feel it everywhere, and almost you get the sense that if you're not part of that entire AI regeneration, you're going to get left behind. And that is very, very real. It's palatable. And everyone is investing, everyone is focused on it.
Okay, 1 minute.
Yeah.
That part of the growth everyone is buying in.
Absolutely.
I'm asking you, if outside the AI part, when you talk to corporates, what's the sense?
So look, I think there too, you are seeing growth across the board. And if you look at, that growth engine, technology, I'm not talking AI, technology is very much at the heart of it. So if you look at a major industrial in the US, they're looking at acquisitions in the tech adjacencies. So software, so if you take a real diehard, core industrial company, they will look at the tech adjacencies. If you take retailers, it's e-tail. So if you look at the autos, it is kind of, autonomous driving, driverless cars, it's really a tech nexus there. Same with healthcare. So I think a tech undercurrent is very much at the heart of, the growth, but there is growth everywhere.
Okay.
The biggest wild card is M&A. So with valuations where they are, if you're not growing organically, then it is acquisitions. And that is really a big part of the growth theme.
Okay. No, I'm persisting on the growth story simply because when this tariff issues cropped up, there was a sense of uncertainty in the world.
Yeah.
And there was a lot of fear that global growth will slow down. You're not seeing signs of that. I mean, give me US and global separately if you wish.
I think US, what you're seeing is 20%, maybe even up to 25%. You're seeing tariffs generally are being absorbed in most cases, in some cases passed through. The inflationary impacts of those remain to be seen.
Okay.
But right now, you're keeping a lid on it, and most companies are assimilating the tariff impacts. If it is beyond that, then the question is, you have to rejig your trade channels. You look at your supply chains, and then say, okay, what do I do? Do I friendshore, nearshore, onshore, offshore? How do I, play with the mix so that I'm still competitive and I can keep doing whatever I used to do? But what you're seeing is there's an element now prevailing that, in most cases, sanity will prevail. There's kind of a base tariff that will stick. But beyond that, reason will prevail. There's a deal to be done. There'll be negotiations, and you'll land somewhere which is acceptable.
Actually, in the past 2 weeks, there have been a series of deals,
that,
especially in the ASEAN countries. The president has also tweeted that something is coming with India. So it clearly looks like the ruffled feathers are getting softened at the moment. But let me come to financial markets itself. What have you made of this rally in gold? You think it continues?
I think multiple drivers there, and it's a bit complicated. I think clearly gold benefits at times of tumult when there is uncertainty. You flock to that asset, and there's an element of that. The other point which is relevant here is clearly there's a lot of government debt, Western government debt, that needs to be rolled, refinanced. You take it. I mean, 30 trillion plus in the United States. There's France, there is the UK, and a lot of that debt will come up for redemption, rolling over, refinancing and the like. And a key kind of factor there is not all the traditional buyers of this paper are natural buyers of this paper in the same magnitude going forward, because of geopolitical tensions, because of different stances. So you kind of, I don't think it's been kind of I've not seen any kind of calculation, but it's not entirely, just a coincidence that you have gold at $4,000, $4,000 at a time when you have got government debt also kind of piling up. So the question is there any kind of rebalancing that's happening within those portfolios?
So gold's higher, this big run, this 50% rise in the past year, is likely to remain that way. You don't see it getting corrected.
I don't see any catalyst that kind of drives that. Okay. Bar some, very stable world where all the conflicts get resolved and,
which doesn't look anytime
and everyone
soon.
is in a happy place and, and we go about, holding hands. And
let me couch the question in the context in which you've come now. We just saw NBD buy 60% stake in an Indian bank, RBL, and then we saw before that SMBC buy about a 24% stake in Yes Bank. So foreign bank interest, not just private equity, which is of course Blackstone is buying. Foreign bank interest has increased. Can you just explain, would Citi be doing more? What explains this interest?
So I think this is a pivotal moment because just like in 91, 92 was a pivotal moment for the equity markets, I think this is a pivotal moment for FDI liquidity flows into India. So I think, really kudos to RBI and, really I think the whole kind of regulatory framework for enabling this to happen because this will be a watershed moment for liquidity flows, just like the gates were open for equities, a few decades ago.
Yes.
So I think this you will mean more liquidity flows. I mean, yes, you talked a few about the bank investments and the like, but I would say this is auspicious for broad liquidity in general. And this is good for corporates. This is good for inward investment.
Absolutely.
And this has come at the right time and really hats off to.
Yeah, we could do with more banking capital.
Absolutely.
If this growth story rolls the way it is, which is going to be my next question. I mean, I know you're looking more at deals and banking rather than FPI flows, portfolio flows.
Yeah.
But actually, lately the flows have been attracted to China and some of the ASEAN countries.
Yeah.
Do you see the reversal?
Absolutely. I think it's a no-brainer. I mean, if you look at there are pockets, when you look at the big pockets of investment, America rules right now. I mean, this is where...
Outsized.
It's outsized. I mean, nearly, close to 70% of the world's capitalization is in the United States. I mean, U.S. corporations, take 40-50% of the world's profits are generated by U.S. corporates. The pools of liquidity, whether it is in public markets, private credit, private equity, public credit, all the walls and pools of liquidity are there. And the point is, if you wanted to invest, where do you go? So I think Europe is kind of, soul searching a bit. The UK has its own kind of nuanced post-Brexit kind of problems and issues that it is navigating. France, you've seen the story. Germany is kind of rediscovering its kind of industrial, strengths and the industrial framework. So I think Europe is kind of, right now, it needs to refocus and rejuvenate. China, you cannot ignore. I mean, it is an incredible economic power. We will figure out how to navigate China better and better. And right now, I think most folks are figuring out how to navigate it in the current, even more so in the current tariff framework. And then where else do you go? It's India. So there is an inevitability to India, ruling the waves, its relevance, massive consumption economy. When you got 1.4 odd billion people, whatever we can produce, we can consume, within this country. And also most folks are actually going up the consumption curve.
Yes.
So disposable incomes are going up, and quality of life is increasing and improving. So I think you cannot ignore.
So the portfolio flows will come.
The portfolio flows will come, and there has been the market has had an incredible run.
Yes.
Retail interest has been super strong. I don't have a view where how much leverage sits in that portfolio, in that framework. But clearly, retail have been big buyers, herein. So I think India, medium, long term, you simply cannot ignore. And you can see the other region which is absolutely blossoming is the Middle East. I mean, Saudi, I think they are just fresh on the back of FII. I think incredible momentum and a real kind of a energy in that market. And likewise, UAE is kind of is booming, and also benefiting from a lot of money flows outside of coming from Europe and the UK, where within our wealth management business, within our kind of private bank, etc., we've seen a lot of money flows, out of the UK, flock to the Middle East.
Okay, that's important. Well, speaking of buoyant financial markets, how much would you worry about something like this, First Brands or Tricolor or generally private credit in general? They had an exuberant run. This is a market which you should be looking at very closely. Are you worried about anything?
I won't make any reference to any insects and stuff like that in this discussion. But I mean, look, I think in all of this, there is a lessons learned exercise as to could this happen at Citi? What went wrong? And every institution kind of on the back of every one of these events, looks through their portfolio, runs the kind of the cleanse and makes sure that, are we robust? Are we buttressed? And is this kind of going to be? So I think a lot of that, Citi, we have done at Citi, and we made sure that, our defenses are intact.
But it's a minor.
It is.
Hiccup, or is it a big problem?
There's fraud here, and at the end of the day, my view on fraud is somebody's going to rob your house. They're going to rob your house, and all you can do is put all the defenses and the bells and whistles and the controls around to make sure it doesn't happen. But there's elements of fraud, from what I understand, in these instances. Are these, is there kind of a ripple effect of any form? Yes, there are a few lights kind of flashing,
but not a big domino.
But there's not a big domino, and all you got to do is you'd be very remiss to not kind of take this and make sure that you are, running your sanity checks and making sure.
Okay, fair point. We have to take a quick commercial break, but I'm back with more questions on the financial markets. Our viewers will be dying to hear a lot more about the Fed in particular. Back in a minute.